Welcome back, everyone. We are with President of HFR Index, Ken Hines, to talk through the numbers for December 2024 for the HFRI. Good morning, Ken.
Happy New Year and good morning.
So, Ken, do you want to give us an overview of the last month of 2024, how we rounded out the year for the HFRI?
Yeah, the HFRI ended the year on a good note with a positive performance. It was kind of a mixed positive performance because some strategy, and this really underscores the strategy diversification. We saw some of the strategies that weren't the leading area of performance for the full year actually lead gains in December. And probably more importantly, you saw a big difference between a big inflection point, I guess you could say, between what we saw in November and what we saw in December. They were just dramatically different months. November, obviously, being a huge risk on, election euphoric risk on environment, where really everything went up. Crypto led the way, and most types of growth equities followed. And interest rates fell. You really saw the reverse of all of that in December, where you saw some of the optimism about rate cuts being priced out of the market. As a result of that, you saw bond yields climb, you saw equities fall, you saw crypto, kind of remain volatile, but generally decline for the month. And so overall, you still saw a hedge fund performance gain that really just illustrates the versatility and the defensive outperformance and the benefits of strategy diversification.
Okay, Ken, so can you walk us through the composite indices and how they performed in December?
Yeah, it was an impressive performance for the hedge fund industry in a very different market environment than what we saw in November. And you can see here that the HFRI asset weighted composite led performance with a gain of about 0.75% in the month of December, which might not sound like a lot, but again, that very quietly was December was very quietly a pretty bad month for overall equities. With, you can see U.S. equities here down 5.25%. And so again, positive performance in a very different market environment, more of a risk-off environment where people were pricing out a lot of interest rate optimism. That's what we saw in December. So the asset-weighted composite up, leading strategy area performance, HFRI macro up 1.1. We're not showing it here, but actually the HFRI macro asset-weighted was actually up closer to 1.6%. So it was really the strongest performance in the industry was led by the large macro funds, and those did well as you saw interest rates rise and equities fall. You also saw a gain for the HFRI 500 relative value index of about 0.33%, which might not seem like a lot, but that's the 16th consecutive monthly gain for the index, which is a very impressive performance. And it's actually the 27th gain in the last 30 months. So really, when you think about steady, consistent gains, fixed income based relative value is a great place for investors. And that's also happened in an environment where we've seen consistent interest rate increases and high inflation. So you've seen that over the course of that time, very steady performance by arbitrage strategies. You can see here the equally weighted composite, really almost a flat performance, a decline of only about 20 basis points for the month. And then you see the other strategies, the HFR 500, 400 in a similar place, and equity hedge with a decline of only about 0.75%. That also is a pretty significant defensive outperformance over U.S. equities. And then event-driven, even after the strong gains in December, a decline of about 1%, again, significantly outperforming equities for the month.
Okay, so at the sub-strategy level, do these patterns hold up too?
Yeah, interestingly enough, in an environment where overall equities decline, technology was still the leading sub-strategy area of performance. It really sort of emphasizes the specialized nature of hedge fund technology exposure, that even in an environment where overall equities decline, technology equities leading area performance with a gain of 6% for the HFR 500 equity hedge technology. Macro commodity, the discretionary commodity hedge funds, 3.5%, also a leading area of And those are not CTA performance. Those are fundamental commodity trading funds. 2.2% in macro currency. Again, not CTAs, fundamental view, macro trading. And then we have energy, basic materials, and fundamental growth, rounding out the top 5 sub-strategy area performance for December.
All right. So turning now to take a look at the full year for the HFRI, what stood out in the composite indices?
Yeah, as you can see here, a strong year for equity hedge, 12.3%, really nearly matching the gain of U.S. equities, which is pretty impressive given that you're not really 100% net long there. That's obviously the hedged performance, really very much in the same ballpark as what you have for overall equities. And the fund weighted composite, again, just about a 10% gain. So a really strong year considering all of the difficult volatility and the sort of uncertain geopolitical environment that really dominated the year, and all the questions about interest rates and inflation. Really a strong performance overall. You can see that the 400 and the asset weighted composite really in about the same place, 9.33% and 9.125% gain. Again, coming back to the really steady performance in fixed income based relative value, you have about 8.9%, 8.78% gain for those strategies for the year. And again, as I pointed out earlier, the 16th consecutive monthly gain is a very impressive thing. And then event-driven, which we've talked about in previous videos, was an area that was a little bit weak. Started off the year a little bit slow and ended the year on a pretty strong note. And heading into 2025, it's really a strong area with a lot of expectations for a really strong M&A cycle to begin 2025.
Okay. And the sub-strategies year to date, which were the most successful ones?
Yeah, you can see here technology, again, almost 25%, 24.75% gain, leading sub-strategy area. And that was obviously pushed into the number one spot by the strong performance to end the year in December. We talked a little bit about that, but a really strong gain. Obviously, we all know the AI story and how much of a trend that's been mostly positive, although there were months with significant pullbacks. It was a very strong positive trend in 2024, and one that many investors are still positioning for it to be strong in 2025. But a lot of people are also trying to be opportunistic and defensive in this area too, because the valuations are so high. Quantitative directional has been a consistently strong performing area for the year. And again, these are strategies that are trend following and similar to CTAs, but focused exclusively on equities, long and short. So they can be, they're equally likely to be long or short. They just take a position based on quantitative models, about 20% there. But no, there as it's essentially a CTA, but no commodity, no currency, no fixed income, just equity models there. And then 16.3% in equity hedge multi-strategy, 16.25% in energy basic materials, and then nearly 16% in event-driven multi-strategy. So really the multi-strategies, and that also dovetails with the multi-manager podcast strategies that we talk a lot about. All of those areas, strong performers in 2024.
Okay, so interestingly, I don't think this technology number includes crypto, does it?
It does not. And as we've talked about in previous videos, the hedge funds which focus exclusively on crypto are a separate index. They're not included in the HFRI. And so we keep them separate here. The performance in December was pretty flat. I think it was about a 2% decline. But for the year, it's been certainly a leading area of performance. So it's somewhat of a misnomer to call it a sub-strategy because technically it's not a sub-strategy within the HFRI, but it's a sub-strategy index that we calculated outside of the HFRI. And you can see here, 60% gain, and really everything, that throughout the year, and certainly with the strong tailwind in November of the election and all of the optimism about crypto associated with the new administration. 60% gain there for the year, and then you can see the we obviously we already talked about all of the other sub strategies, but we have to put this slide on a different slide with a different vertical axis because it dominates the other strategies so much because of the magnitude of those gains. So we have to show it, but certainly it's a tremendous area of growth for the industry looking into 2025. It'll be exciting to see how this develops.
Absolutely. I think mid-month we'll have more interesting updates from crypto, given how the market's moving so far. Thank you for your time today. As we wrap up, any additional words you want to say?
Yeah, thanks. Please, everyone, we got the new website up. Please visit www.hfr.com. A lot of great features there on the indices. So please visit the new website. When you get there, please check out the investor guidebook. It really details a lot of the use cases and the utility of all of HFR's investable indices. If you have questions about that, you can email anyone in HFR, including myself, or you can just send an email to indices@hfr.com. If there's any questions you have about the website or anything you see in the investor guidebook. In addition, if you're watching this video, you know we do regular performance updates on YouTube. Please subscribe to the channel and submit any questions that you have on things that you'd like to hear us discuss on future videos, or things that would be helpful for us to provide more detail on. Thanks, Happy New Year, and we'll speak with you next time.
Thanks, Ken.